the penalty for tax fraud in Pennsylvania, and the impact on you. Living in Pennsylvania comes with tax obligations. Filing your state and federal taxes accurately is crucial to avoid fines and penalties associated with tax fraud. Tax fraud is the intentional evasion of taxes. This could be underreporting income, claiming improper deductions, or engaging in other illegal activities. It can take many forms like filing false returns, claiming false deductions, or hiding money in offshore bank accounts. Filing a false return is a form of tax fraud. Other examples include failing to declare all sources of income, inflating business expenses, fabricating charitable contributions, or falsely reporting capital gains or losses. If you're brought up on federal tax fraud charges, it's a serious offense. It could result in prison time, heavy fines, and even the forfeiture of assets. The IRS conducts investigations into possible cases of federal tax fraud and can refer the matter to the Department of Justice if they believe there's sufficient evidence. Once a case of federal tax fraud is brought to court, the process can be complex. The prosecution will present evidence to prove that you have intentionally committed tax fraud. If convicted, you may be sentenced accordingly. In Pennsylvania, failing to file your state income tax return can lead to serious consequences. The penalty for tax fraud is typically 5% of the unpaid tax per month, up to a maximum of 25%. There may also be interest on any late payment of tax due. Other situations could result in tax-related fines. These include underpayments of tax, failure to pay, and filing a false tax return. If you knowingly file an incorrect or false return, 50% of the underpaid amount will be added to the tax you owe to the state. Avoiding the penalty for tax fraud is crucial. If you need help with potential tax fraud charges, consider seeking legal consultation. It's always better to be safe than sorry when it comes to your taxes.